I was going through July Kiplinger magazine. They had a bunch of things about identity theft and credit card theft and locking down your accounts and so forth. And they on the radio you hear about home title theft and having title locks, deed theft, and things like that. Are those mechanisms worth looking into? I also have my house is in a revocable trust, which probably adds another layer, but that's kind of about the only thing that they didn't address. Have you had any information about that, maybe in seminars?
I've done a little reading on it. I haven't gone a whole lot in depth there, but it's not something that I think there's much value in. If you're going to spend the money on some kind of monitoring system, I would say it would be money more well spent to do like a credit monitoring or something like that, where they alert you if anybody tries to open a loan in your name, because I'm not really sure how much of the actual deed theft there is that goes on. I think it's a little bit sensationalized, and it's like any insurance that you're considering buying. I think title insurance probably has a lot more value or a lot more worth than some of these other things. You really have to weigh out what's at risk and what is the cost of the insurance. So it's like, the reason that life insurance companies make so much money is because they pay out very, very little on the policies that they write. Not because they're doing anything wrong. It's just really because of consumer behavior. People, a lot of people buy term insurance. So I don't know what the current statistics are, but a very small percentage of death claims actually get paid out because the way that they price the insurance, the probability, if you're a young 20 or 30-year-old and you're buying a 20-year term policy, the odds of you actually dying during that 20 years is really low, but the risk is really high to your family if you're the primary breadwinner and you do die. So one of the questions that I would ask them, though, is, how much money do you pay out on this? Because, what is your profit margin? How likely is it that, out of every 100 policies or every 100, I don't know, whatever you call it, however many deeds that you cover, how often do you have to pay out on this? I don't think it's probably a very good use of money, and I think you're right. I mean, I'm not an attorney, so I can't say from a legal perspective, but I would agree with you that having your home in an irrevocable, did you say revocable or, oh, you said revocable, yeah, in a revocable trust would add some other layer of protection.